Hello and welcome to another update video about Chiliz. It's time to take a look at the Chiliz chart again, and we are here in a possible broader bullish pattern that started back in May with the possible low of the bear market. It's of course not guaranteed, but at the moment we can assume that this was the low of the bear market for Chiliz based on the structure that developed since then. We moved up in what I would consider a wave 1. We're currently coming down in a wave 2, which should close or stop before we break the May low. And we would then move up in a wave 3, come down in a 4 and move up in a 5. Very important is to make this structure work. It needs to hold the 8 cent level because this is the May low. It would even be more important because that is an even earlier signal. Ideally, it holds the 12.3 cent level. That's the 78.6% Fib level. If we go below 12.3 cents, it is already a warning signal that the overall bullish pattern here isn't going to work out. I do, however, expect one more leg down, which should, however, ideally stop before it reaches the 12.3 cent level. There is still the 88.7% Fib level at 10.3 cents, but this is really the very, very last chance for the bulls to turn around before making a new low. So let's zoom in. The overall structure that developed, in my opinion, here since the high on the 23rd of September is a W, X, Y pattern that is a so-called corrective wave pattern. And in this Y wave, in which we currently are, we have 3 waves, A, B, and C. And the C wave is a 5-wave structure. So I go to the 1-hour chart, we take a look at that. So the C wave is a 5-wave structure, which means we were looking for 5 waves. Whenever we do that, we try to find the 3rd and the 4th wave. We can easily identify the 3rd wave. It is most of the times the longest wave, and also the strongest one, here very clearly identifiable, which bottomed here on the 22nd of November. The wave 4 is usually a shallow retracement, sometimes a triangle, and that is exactly what we see. I think I mentioned in the previous videos that this could very well become a triangle. That is currently working out, and I'm still waiting for one more leg down here. Yeah, I will only change my view if we go above the resistance here and go above 20.5 cents. If we go above 20.5 cents, I will have to assume the low is already in. At the moment, I don't have any sign for that. The triangle is a trend continuation pattern, and if I use the Elliott Wave count as well, A, B, C, D, E, which is a triangle count, you would normally expect a triangle to break to the opposite side of the E wave. Now you can very nicely see here that we are heading into the apex of this possible triangle. There is not much more space, and basically within the next, well, let's say 24 hours, we should get a decision here. If we just take the height of the triangle, as you would most traditionally do it, and add it to a possible breakout point, it would take us down to around 15 cents, 15.3. As per the Elliott Wave extensions, so we can do that as well, look at the Elliott Wave targets for the 5th wave, so we can take the length of the wave 1. We add it to the high of the wave 4. So the very first target for a 5th wave would be the 61.8% extension. And that would take us to around 14.5 cents. And then we've got the 1-to-1 ratio at 12.6 cents. It shouldn't really drop below that, because if you drop below that, again, I showed you that in the beginning with the retracements, we're getting into really dangerous territory. I mean, it could very well, come down here. That this is going to be support range. So if we make one more low, this is going to be, major support range here between, let's say, 15.3, which is sort of that target for the triangle, 15.3 to 12 cents. This will be massive support range, especially here at the previous low at 14.5 cents of that wave A. So I'm looking at one more low. First key support would be the 15.3 cent level. Then you've got 14.5, and then we're going down to those levels that I showed you. But it doesn't necessarily need to go any not much lower. It just needs to go below the low of the wave 3, which was at 16.7 cents, to make a valid wave 5. When do we know that the triangle is indeed breaking to the downside? Well, we know, the first indication is the break of the wave D low that is at 17 cents. That will make it likely that the triangle is indeed breaking. The low of the wave B, when that gets broken at 16.8 cents, that will be confirmation, and then you can be pretty certain that we are heading down. Should we go up from here, then this is the target range. Yeah. Then we have to look at the Fibonacci retracements, because this would indicate that we're not putting a triangle in place. Indeed, then we would have put in it's not a triangle then. I need to change that slightly here. The wave 4 would then most likely just be an ABC pattern. So let me show you that as well. So basically here just A, B, and we're now putting the C wave in, which could reach 19.5 cents or 20.4. Yeah, and really only above that level we have to consider something more bullish. Okay, that's my update about Chiliz. Hopefully you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Thanks a lot for watching. Bye bye.